So in today's lecture we're going to discuss incomplete records. Most small businesses, they may not or they do not keep most records, either because they find it tedious or they may not have the required competences. They may simply keep simple profit and loss, not even profit and loss, but they may just keep receipts and sales, receipts of the expenses and costs that they incur in the sales. As long as they're able to determine that on a particular item which they've sold, they've made profit, that's good enough for them. So over time, they may want to now get financing from some financial institutions such as the banks, and the banks may require them to produce some accounting records. So they will approach someone with the knowledge. So the accountant may be required now, from these pieces of information here and there, a receipt there, an invoice there, come up with some financial statements. So basically they'll be preparing the information using incomplete records. At times the company may have the records, but they may suffer a loss in terms of maybe a flood or a fire, and some of those records may get destroyed. So they will need to prepare the financial statements. If they are lucky, they could have salvaged some documents from the fire. So from this bit of information which has been salvaged, they need to come up with some records. That's what incomplete record is all about. So once we're done with this topic, you should be able to use the accounting equation. You should be able to use ledger accounts to calculate any missing figures. You should also be able to use cash or bank summaries, and lastly you should be able to use profit percentages to calculate missing figures. We'll start with the cost structure. The cost structure is information which is usually expressed in one or two ways, either as a margin or as a markup. Let's start with the markup. So when a question gives you margin, what it means is that your selling price is 100%. Then the profit will be whatever the margin figure that the question has given you. For instance, in this illustration, you are given the margin as 25%. So the profit will be 25%. The cost of sales will be 100 minus 25% to give you 75%. If the margin was given as 20%, then the cost of sales will be 80%. So a margin fixes the sales at 100%. When a question gives you markup, it means it's the cost which is at 100%. Then whatever markup you are given, for example in this illustration we are given markup of 35%. The 35% you add it to the costs of sales to give you your sales 135%. If the margin you are given as 25%, if the markup you are given as 25%, then our sales were going to be 125%. So quick recap, margin fixes the cost of sales, the sales at 100%, while markup fixes the cost of sales as 100%. These two are very important for you to remember. Not only do they get tested at this level, they're heavily tested in F7, which is a paper after this one. So you do well to remember them and master when to use margin and when to use markup. You should also remember the cost of sales formula. The cost of sales formula is given as opening inventory plus purchases minus closing inventory. Again, very important formula which you may be required to use in different areas. If you are trying to compute a gross profit and you're not given the cost of sales, you'll have to find the cost of sales using this formula. Look out also when you're doing published accounts where you're given the trial balance, from the trial balance in some notes, and you have to compute the gross profit. Most times the cost of sales will not be given and you need to use this formula to compute the cost of sales. Again, an important formula not just at this level but also in F7. We have that lecture example there. So let's demonstrate these three formulas that we have looked at in the questions which follow. WCO has on average a profit margin of 40%. In 20x7, sales total costs 476,000. You are required to calculate the cost of sales. We're using margin. We said margin, the sales is the one which is 100%. In the question, we're given margin as 40%. So it means we'll substitute where there's 25% here, we'll substitute 40%. It means our cost of sales will be 60%. Once we do our calculation, so you simply get the sales. The sales were given as 476, so you get the sales and put it in the line of the sales with 100%. The question is asking us to compute the cost of sales. We've said the cost of sales is 60%, so you bring your 60% there. So if 100% is equal to 476, what is 60%? So you're going to cross multiply. 60 times 476,000 divided by 100 gives us our cost of sales as 285,600. Cost of sales as 285,600. We look at another example. YCO operates a standard markup of 30% and has the following information available for 20x7. From this question, we are given the sales, we are given the opening inventory and the closing inventory. We are required to compute the purchases.
Yes.
For us to compute the purchases, we need cost of sales, which were not given in this question, but we're given the markup of 30%, so we're able to compute the cost of sales using the markup formula. Our sales were given 221. The markup is 30%, so our sales are 130%. We are looking for cost of sales. Our cost of sales is 100%, so we are going to cross multiply 100 times 221 divided by 130 gives you the cost of sales of 170. Okay. Then when you get the cost of sales of 170, that's when you now substitute in the cost of sales formula. The question has given us opening inventory, so opening inventory is 43%. 43,000 rather. So 43,000 plus the purchases which we don't know minus the closing inventory which were given in the question as 47,500. And then the cost of sales which we calculated earlier. So we have to work backwards.
Okay.
When you're working backwards, you do the opposite of what you are doing when you're coming down. The opening inventory is added to the purchases, then subtracted subtracting the closing inventory to get the cost of sales. So to work backwards, the cost of sales, you add the closing inventory and subtract the opening inventory. That's how you get your purchases of 174,500. Is that clear?